I hope traders and investors alike were green yesterday. So in this video, we are going to go to the live charts and do Friday's action live. I wanted to talk about the entire week because we had a very interesting week. We gapped up and it gave us a nice island top up here. We end up breaking down. So we had a big gap here. When we opened up down here, we opened up right in the middle of the gap, moved down, all that was filled, got a nice reversal right off our level, and we pushed right back up, and you can see as we've been filling these gaps. Now this is still left open. There is still a small gap left up there, but the rest of this has been filled. I just wanted to point out, and talk a little more about the gap, because when we get to the live charts, we're not going to talk about that as much, but we will be going over what we've seen in our trading room, from pre-market into the market open, flow and all that coming in. Unfortunately, I am unable to put up, every single chart that I watched throughout the day, so there's a lot of things that I can't call out that I am able to call out into the trading room that I just can't include in these videos, but we're definitely going to cover a lot of it. So let's go to some live trading. All right, we're going to try to recreate the trading room the best that we can. We're going to talk about what information we had coming in. We'll lean more on price action than anything. So let's just get right into it. Let's talk about what we knew in pre-market. So we knew that the bond market had been murdered on the day before. We knew the VIX had been gapping up. The advanced decline lines took a hard rollover, small caps especially. We knew we had Goolsbee speaking at 11:30, job numbers coming out at 8:30, and then more data coming out at 9:45, again at 10. We know Breath took a hard rollover as well. So we had gapped up. We have basically put in an island top up here. We did work on filling some of the gap. On Thursday, we had opened up in the middle of the gap, pulled down, filled it to the downside, and then pushed back up and worked on some more of the gap to the upside. But it did leave us with a gap here. We have our levels up. The levels we were watching, 437.31. We were watching 441, and we were also watching the gap itself, the daily 5 at 441.68, the daily 9 at 438.95. Those are not a big deal, and I do not have those lines on. I don't have lines on my chart while I'm trading. I'm just pointing those out so we can know where they are as we do this. We did have a nice reaction at first when the job numbers come out at 8:30, and then it just kind of died off. So let's see what we get here. Our first candle, that's our first 5-minute candle, so we'll go right to the 1-minute time frame. We're going to try to incorporate multiple time frames here. So that just gives us our first 5 minutes. You can see we gap down, big indecision candle, then shooting right back up into your short-term moving averages. At this point, so the first 2 minutes of flow was very mixed, and then after 9:32 we started to go to heavy call flow coming in. The market went to about 80% bullish for a few minutes before it slacked off, but the market did stay extremely bullish on the options flow. In the beginning, Breath was raging higher at this point, so that was telling us that there was buying across the market. We had seen a lot of green on our scanners telling us that there was participation into the market, and the IWM was looking really good as well. So that's the first 5 minutes there. Let's see what happens here, because at this point we know we need to take out our moving averages to go in on it. Another thing that we know, we need to see the second 5-minute candle take out the first 5-minute candle. That can be bullish or bearish. You can see it to the upside or the downside. That's a signal of strength. So we need this 5-minute candle to push up above this candle before we start looking for an entry on the 5-minute chart. So right now, the market looks like it's full of indecision. It could go either way at this point. Like I said, we need to see that 5-minute candle taken out. And at this point in time, it looked like it wanted to go down. We see this very nice hammer candle here. So that's screaming that there could be a reversal coming. Remember, 1, 2, 3. So it could take up to 3 candles to get your breakout on that. And why we're right here, we are forming a very nice trading range. And that's not what we wanted to do. Let's go back to trend line. And let's put this here like this, because that's giving us a nice trading range on both ends. At this point, we got enough candles down here. We can start getting an idea So let's continue lower, because that's what that's giving us. And it's actually forming a bull flag. It's not the perfect setup for a bull flag, but this is actually forming a bull flag. And you can see a false breakout to the upside. Should have never even been considering a trade there because you were still under your daily 20. Turn this 5 off on the 1 minute chart, but there is a breakout coming here, and this was a beautiful trade. You can see trying to break back out. So right now your 20, even though we drew this line was taken out, your 20 needs to be cleared before we're looking for an entrance. But we're definitely seeing some perkiness in here. And then boom, this candle was to clear this 20. So at this point, we have a strong MACD. We're getting bullish flow coming in. Our moving averages are turning up. We did break a small bull flag. It, wasn't the prettiest in the world, but you can see your flagpole. You can see the bull flag there. I'm going to go ahead and take these lines down. But we get the idea. You can see your flagpole. You can see your flag. You can see your breakout right there. Also want to point out that this second hammer down here, indecision candle, also once again was on this level. So the 438, which is your 5 on, your 9, your daily 9, which was acting as a support level there. So we're pushing right off the daily 9. At this point, we screen back up to the gap. Now, a lot of people want to automatically assume that we're just going to bust into that gap and just fill it. But the gap is actually resistance, and we know that. We know we're extended from our 9 here. So we're really not looking to chase. Let's go take a look at the 5-minute time frame. So you can see right here, it took a little bit here before your opening candle to be taken out, but this candle finally took out your opening candle and closed back above your moving averages up there. I do want to turn this 5 back on so you can see we're back above all the moving averages, testing the gap. So, at this point, the market looks really good. Can we get into that gap? And we were not expecting to take that gap out yet, to be perfectly honest, because at this point we were extended from our 1. We know we want to get up there to the gap and have our 9 on the 1 closer in the gap with us. So we were not really looking for a breakout there. And you can see here we just got a evening star. It can take 3 candles to confirm that evening star. You see your bullish, the star, bearish, large bearish engulfing candle. So that could be a sign here. Now, MACD is screaming higher. At this point, we are still seeing plenty of bullish flow come in to the market. And remember, it's not always calls. Sometimes puts are bullish as well if they're selling puts. You see 5-minute candle here confirmed over that. We may be catching that candle right in the middle, so be a little careful with that. Need to get that 9 up there if we're going to hold. We want this 9 into this box. This can pop. We're not going to chase it. We're going to wait for it to come back. Waiting for that is getting ready to keep you out of a bad trade. Waiting for that 9 to take the level out. You can see where the 9 finally got up above here. And boom, right back down. So at this point, if you would have took this trade, it would have been a failure. And this just comes back to all, we just can't win every trade. We just can't win every trade. So chopping around up here, you can see this small pattern right here, head, shoulder, head, just basically putting in a tight range. You can draw a trend line through here. So that's what we're going to do. We're going to just draw this neckline right here and see how this acts. Now remember, we have talked about head and shoulders patterns plenty of times. You've noticed it's a small one. We completely understand how they trade. Breaking confirmation below the neckline. MACD has crossed bearish. Let's see what the 5 looks like here. In your 5-minute time frame, you can see it's coming down. Now at this point on the 5, you're breaking your let's blow this up. You're breaking your 5-minute your 5 moving average on the 5, but you still have your 9 and 20 down there. You can definitely see a change on the 1. Like I say, you can already see the 3 tops there, the little head and shoulders pattern. So just starting to move down here. The moving averages started to follow price down, and then it shot right back up, heading up to test the top of the pattern. So the textbook says, as long as if you take the trade here and you stay into it, you can stay into the trade until it clears the top of the pattern. If you're trading a short-term option, you can take a big hit in between that area. But as you can see, the textbook was clearly right. If we would have took a trade there, we could have stayed into it. Now you have to make that decision when you taking trades like that of which strike you want to enter, or which strike, depending on whether you want to hold that trade or cut it and look to get back in, has a lot to do depending on what strike you're in. You remember, build your strategies around your weaknesses. So you can see the 5-minute time frame here struggling, coming back down into this 9, finding support right there at that 9 and 20 so far. So we also, it doesn't mean that we can't blow through that time, but we have to be respectful of our short-term moving averages on our 5-minute time frame. Doesn't mean we can't blow through them. And it also depends on what kind of mood the market's in, whether you want to try to take a trade through them or not. Your conservative trader is not going to trade through the moving averages, even though some trades can be good trades through the moving averages. So you can see we pushed back up. We got a nice move down here off that head and shoulders. Now that's not a huge head and shoulders pattern, so you wouldn't be expecting a huge move out of that pattern. But you can see flagging back up, and once again, we know how head and shoulders trades. We talk about this all the time. They can give you some really serious flags, flagging back up to your short-term moving average to make you think that it's getting ready to break it. At this point, we're putting in a small bottom ascending triangle-ish type pattern here, which is once again just basic price action. There's a seller sitting here trying to hold price down. The buyers are stepping in. There's a small battle here, and the thing is who's going to win it? The buyers are trying to exhaust the sellers, and in this case, we end up, even though your ascending triangle is usually a bullish pattern, in this case it's acting as a continuation pattern for a trend farther to the downside. And like I say, we've talked in depth of how head and shoulders patterns trade, so you can get a lot of really strong fake outs. For me, it's all about moving in and out of them in between their flagging stages. So you can see the 5-minute time frame moving back down, coming back down to test that the daily 9. So that's your daily 9 area right there. So it's coming back down to test that. Let's go back to the 1-minute chart. I know this is probably getting a little confusing, bouncing around, and I do apologize. And you can see we're coming down here on the 1-minute time frame, giving us a set of pipes right here at your daily 9. So this can be a bullish reversal signal. See what it does. We're still extended from the 9, so we push back up into the 9. This is a candlestick reversal pattern called a set of pipes. And you can see pushing back up here. Nice move. At this point right here, you want to start watching your pattern. You have a downtrend or this uptrend here. You could draw out and extend out. It could move into that. You also have this candle line. This would be my first level of interest there, as worrying to move back up, that we could move back in that area and see some resistance. Depending on the mood of the market and how much momentum you have, of how seriously you take a little area like that. But that's the next level yet needs to be broken. You can see we pushed up, tested that area, starting to look a little inverted head and shoulderish here. Definitely not textbook. And you can see we closed up above this area, so we're getting ready to push up now. We need this 9 coming up. This candle closed up above, come back. So that's your new entry. Candle structure is not perfect right now. We don't have the greatest momentum, and we talk about this every day about how market structure is a little sloppy. The candle structure is a little sloppy because we're having low volume, not only summertime but the holiday week. The market structure being so weak, makes adding that 5 on the 5, it's almost like having a secret weapon. So let's go back to the 1-minute chart here. So we were coming into there. The 5-minute MACD was crossing. We were seeing volume coming in this area as well. So, and as you can see, we have this little inverted head and shoulderish pattern here. It's not perfect. All started with a set of pipes pushing back up. So, and you can see we have cleared our pattern moving into the gap. So, testing the gap, we know from previous tests we need to take out this area here because the gap is actually, this part's actually been filled. So, our previous high of the day is what we are looking to take out, or the previous area when we pushed up and went into that gap. That's the area that needs to be cleared now for a move up. We know we just got the goose head pinch here. It's not perfect. We know we got volume coming in. We got a MACD cross on the 5, even better. So let's see what we get here. I am going to turn the 5 back off on the 1 minute time frame. So didn't take it out yet. Remember, this is the level, the new level that needs to be cleared. So looking a little weak here. Still not ready to take that gap out yet, but as you can see, this was a previous low. We pushed up, putting in a possible new low. You want to keep the trend line drawn through there if you're looking to take a quick pop in this area, but you know you can't take a trending trade until you clear this area right here, because this part of the gap's actually been filled. This is the new gap up in that area. So pushing back up into the area now with a higher low. This area needs to be cleared. We need to start putting in a new high or it's not going to work. So that action right there, cooled our MACD off, resetting the MACD back up, coming up into this area. This is the area to watch now. Remember, that's the area that needs to be taken out. Let's go check on the 5 minute time frame. So here, the 5 minute time frame has confirmed. We've got to confirm back into the box area, but we still need to clear that area. Let's turn the 5 on. You can see the 5's right there. The 5's not quite crossed that line yet. Still got a decent MACD. It's spreading, seeing darker green histogram bars come in, which is telling us more bullish momentum's coming in on the 5. So it's the trade. There's a possible trade right here setting up. You're coming up to test this level. Your 9. Let's turn the 5 back off. The 9 and the 5 on the 1's crossed that area, but the 9 has crossed this area. So this is when we're starting to look for a trade. This is the area to watch here. If we can, we've seen several tests of this area. So if we can clear this area, we automatically expect price acceleration. Pushing into it, 9's working up nicely. Pull back the original old gap level, still holding here. No need to be into a trade yet because we know we have to clear that area. If we clear that area, we can start to see price acceleration, start to see momentum, and taking off. So watching this area right here. Once again, trying to fail. But overall, you know, it's a higher low from this area right here. So you're still putting in higher lows. Nice test of this area, pulling back, heading back up to it. Remember, a lot of times when an area gets tested, it doesn't take it out the first time. It'll pull back and come back to it. And once again, the market structure is not the best here. So let's go look at the 5 minute time frames pushing up. You can see that candle's up above that area. If you turn your 5 on, the 5 is actually up there as well. So we turn the 5 back off on the 5 minute time frame. Let's go back to the 1 minute. And starting to push here, clearing this level. So a retest of this level or the short-term moving average, which was pretty much almost got it there. Flagging, pushing higher. Let's take a look at the 5 minute time frame. All right, so now we're coming into our 441 level. Let's take a look at the 5 minute time frame here. Looks great, pushing up. Moving averages are on their way up, heading into 441. Let's go back to the 1. And you can see this little candle here, nice candle, pushing back up off the 9, testing the 441. A lot of times when these areas get tested, we don't take it out the first time, we come back to it. Still pushed up, that's your new levels. These candles here, your new level to watch. There's your 9 right there. Did you see how when your 9 crossed, you started to push up? So now we know we're coming up into the 5. This is the daily 5-ish area here. If we go back to the 5-minute chart, 5-minute time frame still looks good. Great MACD there. You can see the bullish histogram bars, the brighter green. That's a brighter, stronger bullish momentum coming into the stock. You can see how we popped this level and we held it for about 5 minutes, put in some small area waiting for the moving averages to catch up with a nice push. If we turn our 5 on right there, you can see how well that was respected. So like I say, we've been losing the 9 and the 5 on the 1 a lot, but that 5 on the 5 has been just like the secret weapon. All right, let's go back to the 1-minute time frame here. I'm going to speed this up a little bit, and you can see the push playing around over the daily 5 here, putting in a nice flag, trying to push there. You can see we flagged, put in a high, so this is the high that needs to be taken out. Starting to see a lower high being put in, just signs of chopping. The trend is strong to the upside. Just remember, when you see this happening, a lot of times it's just getting ready for the next move higher. Even though that's very head and shoulders there, it did take off moving higher, respecting the moving averages. When you pull back, it just pushed into the 20. If we go back and look at the 5-minute time frame here, MACD still looks great. Nice flag to the 9. If you turn your 5 on, you can see very nice flag to your 5-minute 5. That is a great addition on the, we watch it on all time frames, but we only trade with it on the 5-minute, but we know where it's at all times. Got this MACD trying to come in for a cross here again on the 1. Pushing higher, and starting to see a little bit of struggle there. So when you see this struggle, you can draw a line across here. We need to move higher. Can kind of already see a possible head or a possible shoulder. This could be a possible head, and that's how we call it out in the trading room. Not trying to pre-call it like we know it's there, because we do know what's coming, but that's actually how we call things out in the trading room. When we see something forming, possibilities of it, it gives us an idea of what's happening here. So we were already looking for a possible right shoulder to be put in, and as you can see right now, we're starting to do that. And this is finishing up the shoulder. So at this point, you can already see what's happening here. So you should have a neckline drawn like this, and that line can be changed a little bit because where the pattern's not finished forming yet, things may change. And right there, you can see we're trying to confirm below this head and shoulders pattern. Let's go back to the 5-minute time frame. And this head and shoulders pattern provided a great move. Let's turn the 5 back on. So you can see we have broke below the 9 and the 5, and this candle is actually closing below your 5-minute 20, and your 5-minute MACD is screaming bearish there, bearish cross on the way down. Let's go back to the 5, or the 1, I'm sorry. Go back to the 1, see what we get here. Coming down, and you can see right there, we come down, tested our level, seen a rejection, testing, come back, trying to take the level out there. Level's trying to hold here, but the sellers keep stepping back in, trying to push price down. You can see starting to break down, coming back up. So we're starting to see some expansion phase, some pretty tight action in here. Price looks like it's trying to start expanding. We do have a bullish MACD, but there is a seller sitting there. We do know that it was a failed pop already. We also know we have a head and shoulders breaking down, so we know how head and shoulders trade. The 5 on the 5's resistance, the 9's coming down. That 5 on the 5's your major level there that needs to be broken before you're even looking for any up moves. Even though it looks like it's trying to push up here, we know we have resistance. That 5 on that 5 needs to be cleared. It's too close. And you can see this level still holding as resistance for now. Even when we popped up, starting to move lower. And we know how head and shoulders patterns trade, so this was perfectly expected. We actually took a bigger move down, and at the end of the day, than what I thought we were. I did not think we were going to pull down and literally put in a new low to the market. You can just see a H cell pattern form there, respecting the 9 on the way down. So let's go to our 5-minute time frame real quick. You can see how well your 5 is being respected to the downside right there. That candle did open up above it, but right back down. Your 9 never got taken out on the 5. Coming down here, testing previous lows of the day. Let's go back to the 1 and bearish MACD screaming lower. Flagging on this level, come down, found support. That provided another good trade right at the end of the day. That concludes this video. I hope you find this helpful. It's a little longer than what I wanted it to be. Please remember, discipline is the key to your success in trading, and I'm going to see you in the trading room.